Hey, Genius Nation. In this episode, I'm going to be interviewing Mr. Brian Canter. Now, what struck me about Mr. Canter is that he is an individual investor, like most of us, but he is doing his trading in a much smarter way. He is doing it inside of a corporation. I know we've gotten questions about this in the past, and so I asked Brian to talk with me about it, and we actually went in pretty deep into asset protection and setting up the whole 9 yards. So I really hope you get a lot out of this. And if you have any questions, you can reach out to Brian on Facebook, and the links to all the resources that he mentioned are going to be in the show notes. But this really is for most of you who are looking to, or really need to protect yourself, as well as increase your tax deductions, as well as keep more of your money in your own pocket. So without further ado, here's the interview. At Option Genius, we believe that you deserve freedom, financial freedom, so that you have no more worries and more than enough money. Time freedom, so that you could do what you want, when you want to do it. And choice freedom, to live your life on your terms. But the system and Wall Street are rigged against us little guys. So how do we fight back? Well, my friend, that's what this podcast is all about. My name is Alan Sama, and this is the Option Genius Podcast. I assume that you are, I can't tell from your Facebook page what you do for a living.
I'm retired now. I was active duty military for 23 years and retired in 12. Went to work for a defense contractor for a couple of years, Johns Hopkins Applied Physics Lab. But I've been fully retired since 14. I'm a budding author. I was over in Scotland for the last 6 months doing research on 4th century Picts for a novel that I'm preparing to write about that. So we'll see. But I trade, if you will, pseudo full-time. Sometimes I'm off, and I'm not sitting in front of my computer every single day, but I tend to swing trade mostly in the futures markets. And so I've been doing that for about 5 or 6 years. Okay.
And you're in Tennessee, is that correct?
No, my full-time residence is Tennessee. I'm temporarily, I was in Santa Fe for about 8 months or 9 months. Then I went overseas to Scotland for 6 months. I'm back in Colorado for ski season. And hopefully when we get a nice recession going here, I'm going to get a 40-foot diesel pusher and live on an RV and live on the road for the next little while.
So you're waiting for the recession, huh?
Yeah. Luxury items like RVs go down in recession, and then as soon as it gets bad enough, the Fed will probably react the way they have over the last several years, drop interest rates, and so I'll get a cheaper RV with a cheaper loan rate, right?
Right, and then you can just refi it. So, okay, cool. So you are retired, correct? And most of your income is from trading?
Well, I have a retirement pension, so that gives me a little bit of a cushion that most people probably don't. Since I retired out of the military, I have that pension that meets my base requirements, and I trade to just earn a little bit more above and beyond that. I also have several projects, publishing projects, and some other things that I've helped do a little bit of financing for a movie and some things like that I like to have extra money. Also charities. I noticed that, for example, you were offering a little bit of a kick into the cleft palate charity.
Right, Smile Train, yeah.
Yeah, so things like that I like to do alongside. And so it's just nice to have a source of income that I can fund projects, I can fund charitable giving, and then supplement my own income with. Okay,
and you're swing trading futures, right? That's what you said?
Yeah, I mostly work off of seasonal data. I noticed actually in some of the archives of your oil trading on the blank check trader, right. Back in the archives you had talked to an organization called MRCI, More Research Center Incorporated, and they publish seasonality data. And so I do a lot of my futures trading is seasonal moves. You know, things happen in cycles, corn, wheat, soy. You know, all those things are harvested at about the same time every year around the globe. And so They establish pretty good seasonal cycles, and so I trade futures off of those. So I'll typically hold a position for anywhere from, say, 10 days to a month and a half, 2 months, something like that.
Interesting. And do you do any options with that?
The first futures options that I've traded was all under the blank check program. That's one of the things that kind of attracted me to that. That was kind of a neat thing to do. That's for futures options. I do also do some options trading. I'll do some options day trading, but then when I see a good setup, I usually like to swing trade those options too. So I'm usually picking something that's a close to the money option with an expiration of, say, 3 months out or so, but for equity options, stock options.
Right. And how much equity do you need in your account to do the type of trading that you do?
I'm trading with an account of around 50,000 or so. You can do it with less than that. The problem is, swing trading, sometimes the swings can get fairly significant. And so you got to have an appetite for a little bit of downside. Most of the seasonal patterns have between an 80 and 90% probability of success, but a lot of times they're one-to-one risk reward. So you might have a drawdown of, a couple $1,000s before it turns up. And sometimes obviously it never turns up. So you just kind of have to have an appetite for that kind of swing and be able to deal with that emotionally as well as in your account. So I wouldn't want to do it with a $10,000 account. 25 is probably good for a few positions. And then, obviously if you have a larger account, you can hold more positions at one time.
Okay, cool. And if you don't mind sharing, what kind of results do you get? Yeah,
sometimes there's good years, sometimes there's bad years. This particular year,
I know that.
Yeah. This particular year turned out not to be so good. In January, I was up about 25% just in the month of January off, and at the time I was running around a $100,000 account. So I was up $25,000 at the beginning of the year, and out of just failure to follow my own rules, which, as you know, is death in trading, right? I had some positions in heating oil and crude that I was certain of, and so I held those positions when I shouldn't have. Those were the bulk of it. There were others, obviously, but I had a drawdown. Not only did I give back that $25K that I had earned, but I did another $40K loss over the year. In the meantime, built that back up so I think net on the year, I'm going to probably have a drawdown of somewhere around 20K or so. So not ideal, but it just reinforces in your mind, have a rule set, follow the rule set, religiously take the losses when they come, and don't have a strong opinion on the market. The market will often tell you that your strong opinion is incorrect.
Exactly. Yeah. Yes, we're most often incorrect.
By the way, I went back and did a double check, and if I had followed my rules, if I had just stopped out and taken the losses when I should have, I'd be up a good 30K for the year, right?
Oh, wow. Well, next year. There's always next year, right? Did you get caught up so they had the big oil drop and the jump in nat gas? Did you get caught up in that?
No, I didn't. Quite honestly, I missed a shot at the nat gas that I should have taken. Another tool that I use in my toolbox is an organization called Momentum Structural Analysis, and they do technical analysis on momentum rather than just on price. And they said, hey, if nat gas goes over this line in the sand, it's going to be a jump because there's a strong momentum base that has built, and that's going to be a strong breakout. And to be honest with you, I don't trade nat gas that much because it's hugely volatile. Even when it has a nice pattern, a seasonal pattern or something like that, the swings on that can drag you up and down multiple thousands of dollars a day. So it just has a little bit more volatility than I have an appetite for. But if I had if I had just taken the breakout, I knew about it. I knew where it was. I saw it happening. and I didn't take that breakout. And if I had, that would have been a very, very lucrative trade. But no, I didn't get lost in the downturn in oil. I actually took my hits back at the end of January, February, when the market kind of did that bottom at the beginning of February.
Right.
I knew about that. I thought I was positioned well for that in the positions that I had, because I expected the market to turn down. And again, I was wrong. Things reacted differently than the way I expected them to. And so that's where I took almost the whole majority of my losses. And then since about April or May, I've been building back up from that was a total of 65K of losses that I took. The 25 that I had made plus an additional 40.
Right. Did you take a break after that?
Or did you
just get back on the horse?
Yeah, a little bit. I still stayed in it. I took a little bit of a break because I went to Scotland. I moved over to Scotland at the end of May, and I was there from May through the end of October. And so I was a little bit more limited in what I was doing, also primarily because I was over there doing research for a novel. So again, I didn't want to be tied to sitting in front of the computer screen all day, every day. But I never didn't have positions on. I just kind of backed off a little bit and didn't have quite as much on.
Okay. And what's your favorite seasonality play?
I like the ags. Right now, things like corn, soybeans, soybean meal, soybean oil, orange juice, any of the agricultural kinds of products, because they're not going to give you these big, huge returns, right? You're not going to get, say one contract, you're not going to get, $5,000 or $10,000 off of one contract like you can in oil or maybe some of the metals, gold and silver,
right.
Some of the things like that, right?
Like currencies, yeah.
Yeah. But they're much more predictable, and they're predictable in a way that's not dependent upon politics, generally speaking. The trade war with China had a little bit of a hiccup in the soy market, but quite honestly, it recovered its cycle pretty quickly after the news events. But those are very regular, very repeatable, and sometimes you can even work spreads. So in the futures markets, particularly in the ags, there are times when a March contract might be more advantageous to the primary holder of that option. The commercial holder of futures are really there for the growers, right? To have a hedge on the prices that they're going to be able to charge for their agricultural products, right? So they don't take a big hit if they get a bad year of rain or something like that, right? So those are very regular patterns, and they're not dependent on things like politics. They're not really even, although they are tied to the dollar a little bit. So they're sensitive to the dollar move. They're not dependent on the dollar move. And if you use spreads, even if the absolute direction of the move is not what you expected it to be, you'll find, for example, a May contract is at certain times of the year, at the end of the year in December, a May contract is going to go up in price faster than a December or a January contract. And so if you buy one and sell the other in those spreads, you get a lot of very high reliability, and not a lot of less downside risk.
Okay. So right now we're recording this in December. So if I were to play it, I would go into soybean meal or soybeans and just do what?
Yeah, I pull that seasonality data. If you do subscribe to their service, which by the way is not, quite honestly, it's not very expensive as trading services go in terms of the cost for those kinds of things. They will show you times where the seasonal patterns line up. So they'll give you things that aren't necessarily recommended trades, but they're good places to look. Then you can apply your own good technical analysis skills to go, yeah, normally that looks good, but the correlations are very bad. So they do that, but then you can also get on, because all the data is available, I'll go in and I'll find places within that seasonality data where it's very consistently moving a direction, right? So where your 5-year, your 15, and your 30-year patterns all look about the same, You know, they're all going up together or all going down together. They don't really diverge from one another. That kind of gives you a good idea that this is a real consistent place. So I have right now, just as an example, I've got a long on in March cotton. I've got a spread on in Eurodollars between the 2019 Eurodollars and the 2021 Eurodollars. That's not a big mover, but you know, it was just kind of a fun spread. I've got a short on in orange juice. I've got a spread on in gasoline between, let's see, I'm trying to pull it up here, with the February gas and sold July gas contract. So there's a spread there. I've got a long on in sugar and a long in corn.
You play a lot of things.
Yeah, and then I've got a short in wheat, and then a spread in wheat. So I'm just straight short the March wheat, March 19 wheat, and then I'm also in the spread of buy the July wheat and short the March wheat. Okay,
interesting. Now, yeah, so I'm trying to figure out, like, you know, if I'm not playing the futures, is there any way I could do this with ETFs?
You can. My only caution to you is, so anything that's not an ag product, you can. So the indexes, you know, you can do this index futures. You can do it with bonds. So you could do this with the TLT and bonds, instead of going with either the 10-year treasuries or the 30-year treasuries. You can obviously do SPYs, QQQs, you know, any of those kinds of ETFs. My only caution to you with agricultural ETFs, gold, you can do GLD, SLV for silver, etc. But the agricultural ETFs, most of those ETFs are not stock plays. You know, there's no actual stock equity behind those. What they are is they're ETFs that are built on the futures contracts. And there's almost always a little bit of a carry charge associated with futures. So if you look out, the December corn right now is going to be at a more expensive price than the January corn, or the March corn, because it takes into account storage fees and carry costs and also a little bit more uncertainty and things like that, right? So depending on how those ETFs go, even a crude oil ETF, I at one time tried to play, instead of playing it with a crude oil futures, I tried to play it with an oil ETF.
The USO?
USO. And I found, and it really surprised me, you know, it went down when I didn't expect it to. I was playing a positive play. It went down when I didn't expect it to. When it got back to the price that I had bought it at, it was worth less. Because they had been rolling these futures contracts underneath that, right? That's one of them used on futures contracts. They had been rolling them under there, and they'd been taking a little bit of a loss every time they rolled it forward to the next month. So on the futures itself, if I had bought it at $30 a barrel and it went down and then came back up to $30 a barrel, the futures contract would be worth exactly zero, right? I wouldn't have lost anything on that. With
the USO, there's that underlying cost and the service fees and whatever that they charge as well. So, yeah, makes sense.
Yeah. And the normal contango that you have between front month contract and a back month contract. So you just got to be careful. Certainly, if you're in any of the the stock things or the futures, obviously are a good way to play the currencies rather than playing directly in the forex market. You can play them in the futures. And you can get away with doing some of that also in the ETFs and be just fine if you don't want to leverage up with the futures.
Cool. Sounds interesting. Yeah, I haven't done much in futures in a long time. Did a little bit in soybeans when I first got started, but I took a bath on the Japanese yen, and so I haven't ever gone back into futures really.
I like things like agricultural products better than I like the currencies and things like that, because all of those are really dependent on people's decisions, right?
Yes.
And although there are cyclical patterns associated with those fiscal year endings and things like that can have an influence on there, they can also be just political decisions. Some central bank decides to raise or lower its interest rates, and that completely blows your play, right? So it's not something that you can just rely on the cyclical patterns for. And so I'd prefer to play things like the ags. Corn's going to be harvested the same time every single year. Might be a good year or a bad year, but we know when the harvest is going to happen, right? And so it's a little bit more reliable cyclical patterns with the agricultural products.
Yeah, that and the yen and the currencies are very volatile, so you need more money to play each contract, and the moves are much larger than in corn or wheat or soybeans or anything like that.
Yeah, absolutely.
So, cool. One of the things that made me want to talk to you was that you are doing something that a lot of traders think about, but I haven't seen too many actually pull the plug on, which is trading inside of a corporate entity. Is that correct?
Yeah, that's correct.
Now, before we go on, I want to put in the disclaimer that we are not accountants or lawyers or anything like that, and we're not giving anybody financial advice or accounting advice or tax advice or anything like that. This is just something that I wanted to talk to Brian about to share his experiences in this. So, Brian, why did you decide to go that route?
Yeah, I was already kind of trading with a group. They introduced me to an asset protection seminar that was conducted by a company called Anderson Business Advisors. And it was funny because their real focus at that point in time was just primarily on asset protection and or being able to create better tax situations and things like that. What I wasn't really aware of, and I became acutely aware of this after the fact, was that if you have cash in a brokerage account that you're trading in your own personal name, if you run into the back of somebody in a car and there's $1 million lawsuit filed and you have $300,000 liability protection on your insurance, the first thing they're going to do, if the person comes to a lawyer, the lawyer is going to sit down and do an asset search on you. And if you've got no money, they're going to sue for the amount that's in the liability package in the insurance, right? Because that's what they think they can probably get. If you've got a ton of cash sitting out there, it is completely vulnerable. So I started it primarily as an asset protection thing, but the way my entity structures are put in place, it also gives me the ability to take deductions for costs associated with my business, tax deductions, that I would not be able to do as a private trader. Most people are classified just as private traders, or if you will, amateur traders. If you want to get the designation as a professional trader, it's a little bit more shaky with the IRS, and it gets a lot more scrutiny. My particular entity structure is set up, I actually have two. My trading account and all my cash assets are in a limited partnership, and that is it's segmented, right? Everything in that limited partnership is not mine. It belongs to the limited partnership. And I am a passive partner, if you will, in that I'm called a limited partner. The general partner is actually a C corporation that is also my C corporation.
Okay, so you own the C, you're 100% shareholder?
I am the 100% shareholder of the C Corp, and then I'm a partner with the C Corp in the limited partnership. Right. So what that does is, number one, it puts all of my assets that could be at risk, all my cash, my liquid assets, so my brokerage accounts, my savings accounts, all of those kinds of things are in the limited partnership. And then the general partner for that limited partnership is the C Corp. The C Corp is also the manager of my trading activities. So I'm able to take the tax write-offs in the C Corp and keep all of the assets in the limited partnership. One of the advantages, by the way, that does give you is anonymity. If I ran in, and literally about a month after I set this structure in place, I did back end somebody. We were sitting at a red light, and it turned green. I have a clutch, a standard transmission car. So I started to roll forward and the car in front of me did not. And so I just bumped the back bumper. The lady got out of the car, came back and looked at me and looked at the car, realized there wasn't any damage, and all of a sudden said, "Oh, my neck." And so they ended up suing. Now, it turned out that was actually all covered by my insurance, but it just highlighted to me the fact that had that been a real accident where somebody really had gotten hurt, they could have come after all of my assets. Well, first of all, if they did a search on my assets, they would find I have a couple of grand in a checking account, and that's all, because everything else I own is in another entity. So it doesn't show up under my name in an asset search. But even if it did, they could only sue me. They can't sue the limited partnership, and they can't sue the C Corp.
Right.
As long as I'm not doing something illegal and negligent, right? They can't do that. There's a barrier there. And so those assets are protected, and then the C Corp gives me the opportunity to take off. So, for example, the subscription fees that I pay to you for Blank Check Trader and the Options Genius that I'm doing with you, those are fully deductible to me under my C Corp. They would not be deductible if I was a private trader. I couldn't take those costs away from the income that I generate.
Right. So you also mentioned a couple other services like the momentum one and the seasonality one. So all those, whatever you're paying, and your commissions too, right, would probably be deductible, and they're given to the C Corp. So the profits, any trading profits, they flow into the C Corp as well? Yeah,
based on so there's two ways that the C Corp makes money, and you do need to be, I will say, you need to be profitable for this to be worthwhile, or you need a lot of cash that otherwise would be at risk, right? If you have a $10,000 account and you're really not profitable, then there's some costs associated with it that would just make it not worth it. Right. But if you have, $120,000, $150,000 laying around or more, then that's something you would want to protect. And the cost to do that is essentially just like an insurance cost or anything like that. But then if you're profitable, then the deductions will more than pay for any kind of the costs that you have associated with setting up and maintaining the entities. So the general partner is like 1/10 partner, and I'm 90% partner. Okay. So the profits that are in the limited partnership, the partnership, by the way, it has to file a tax return, but it doesn't claim any profits. The profits all flow through to the partners. Okay. So it's just kind of a reporting mechanism to the IRS, and it's a pretty simple thing. But yeah, so 90% of the profits flow to me, 10% flow to the C Corp as personal income, regardless of whether we actually take distributions from the partnership or not. But the other way that the C Corp makes money is it's the manager of the trading activities. So I've got a management agreement between the limited partnership and the C Corp, and the limited partnership pays a management fee to the C Corp. So the C Corp can make money that way through management fees. And then, again, all of these expenses, the goal is to have enough expenses to cover all of the management fees so that you actually come out with a net even. But, again, you get to deduct things, travel. So if you held a seminar sometime and I wanted to come to that seminar, the travel to a certain extent, and the laws just changed on this, but things like the meals and entertainment and things like that associated with those kinds of events, a lot of that is still deductible. I can have a meeting in my own house with myself and go through conduct the business that I would be conducting for those businesses, and I can actually take a portion. I can charge my business.
Charge rent. Yeah. Your house, you can charge rent to the business.
Yeah. And that's just for meetings. Like, you don't want to get into a situation where you do the home office kind of thing and stuff like that. But phone bills, computer costs, you have to have a computer to trade, right? Yeah. You really have to have a phone to be able to monitor it. Internet costs, exactly. All of those things are very legitimate expenses that the C Corp can be responsible for those expenses. So it's something that you probably would have paid for anyway, but in this case, you've transferred that expense to the C Corp, and the C Corp gets to deduct it off of any of the income that it makes.
So do you want to have the C Corp making any money or no?
You really only want to have it making enough money to cover its costs.
Right, okay.
And so you can tailor the agreement between the limited partnership and the C Corp. You can tailor that agreement. There's other things that you can do that I'm not doing with the C Corp right now, and this is just my own personal choice because of how I'm set up. But you can have the C Corp set up a pension program, and so it can be a defined benefits program, and you can contribute some of the earnings of the C Corp to that pension plan for you. Now, the only way for that to work is you either have to be an officer or an employee of the company. Mm-hmm. A lot of the folks, a lot of times I talk to people that are instructors or teachers in the trading community, and I say, well, if you can make all this money trading, why are you teaching? And a very common answer is, if I'm just trading, all of my income is technically passive income. It's not earned income, so I can't contribute anything to an IRA or anything like that for retirement. Mm-hmm. Your corporation, you could actually either hire yourself and pay yourself a salary, in which case you'd have earned income that you can contribute to an IRA, or you can set within this C Corp, you can set up a defined benefit pension program where you're contributing to the pension program for yourself. And you can do that just as an officer of the company. You don't necessarily even have to have the earned income that way. So it gives you a lot of flexibility of ways that you can do that, both retirement planning, getting tax savings off of deductible expenses, and then also reducing your taxable income by having it contributed to a pre-tax retirement kind of income benefit program.
Yeah, I think once you get into the corporate structure of it, there's so many benefits that are way better than just doing it on your own. But what struck me was, obviously, somebody's listening to this, they're like, okay, that sounds great, but how much does it cost to set up? How much does it cost to maintain? And, do I have a big enough account to actually make it worth my while? So I was under the assumption that, if you're dealing with maybe 250,000 and up, then this would make sense to you. But I was surprised that, you're doing it with a $50,000 account.
Yeah, and when I say that, that's my trading account. I've got some investment money that's in there too, but still, all total, I've also got some real estate that I hold within the limited partnership and or the C Corp, right? So, but all total, probably about $150,000 in assets that are inside of the entity structure. And so certainly that's enough that I would want to have the asset protection aspects playing with it. With a smaller account, it can be, instead of going the way that I have it set up there, you can set up an LLC. So don't do the limited partnership. Don't do the C Corp. You can set up an LLC that is taxed as a C Corp. But when you're doing that, again, in all of these cases, I would recommend, you don't necessarily need to go with Anderson Business Advisors, certainly, but I would make sure that you work through a lawyer who understands what you're trying to do and setting those things up. You get any lawyer to file an LLC for you. In some cases, you can even do it on your own, but you really need to make sure that it's structured correctly. LLCs can be set up. They are not individually recognized by the IRS. The IRS does not recognize an LLC. So your LLC, you have to say, well, I want this to be either a disregarded entity, or I want it to be taxed as a partnership, or I want it to be taxed as a C Corp, or taxed as an S Corp. And how that's set up can have significant impact on what you're able to deduct and how and all that kind of stuff. So you really need to work with somebody that knows how to set it up for the kind of purpose that you're trying to do. And so you could get away with just an LLC. It would give you some aspects of asset protection and also give you the ability to deduct some expenses, but it would probably need to be an LLC set up as a taxed as a C Corp.
Okay, not as an S Corp.
No, S Corps used to be really kind of not good entities for this kind of purpose. The recent tax changes made them a little bit more favorable, but the choice between the two, C Corp outdoes the S Corp hands down for the kinds of purposes that you would need for trading and that kind of investment management kind of things.
Okay. All right. But the taxes on a C Corp are higher than on an S Corp, right? Because your S Corp, they do it at your personal bracket?
Yeah, so by the way, the recent law just reduced the tax burden on C Corps, right? So that was a good thing. It is, but if you run it correctly, again, I don't really want my C Corp to make a lot of money. I want my C Corp to make enough money to cover the expenses that it has, which may include, contributions to a defined benefit program or something like that, right? But all of these, my travel expenses, my subscription expenses, all of those kinds of things, I want it to be able to cover those expenses, but I don't want it to make a lot of money. Thus far, in 5 years of having a C Corp, my C Corp has never paid tax because it never made enough money over and above the expenses that it had to pay taxes.
Okay, I'm glad you said that. And in order to do that, do you change the management agreement every year?
Yeah, certainly the management agreement should be reviewed every year, and you can adjust that appropriately, right? But if you make it $10,000 a month, then you'd have to have $10,000 a month of expenses to cover, to make that worthwhile having. Right.
And then, of course, like you said, you need to have a meeting, like a board meeting or partner meeting. And you said you do it at your house, but you could actually do that anywhere. You could do it on the slopes. You could do it in Hawaii. You could do it anywhere. And that part of that is deductible as well.
That's correct. If you have a legitimate business purpose for doing something someplace, then there has to be a certain amount of work done compared to business time versus personal time.
Right.
So you can't take a 10-day vacation in Hawaii and spend one day, 4 hours of one day doing a little bit of business stuff. But depending on how you set it up for travel days and in relation to weekends and things like that, you could certainly decide that you wanted to go to Hawaii to have your board meeting. While you're in Hawaii doing your board meeting, you might want to look at and document some potential real estate that you might be interested in buying. If your screen time in front of the computer doing trading, those can count as business days, as long as you're engaged in business activities, and particularly if you're having any kind of meetings with other people that would be business associated. You can do that, and then if you do it over a weekend, the weekend days don't count. And I think the requirement is actually 4 hours of business constitutes a business day, and you get travel days for free. So you could very easily do a week-long vacation in Hawaii legally and legitimately, conduct a certain amount of business on 3 to 4 of those days, have 3 days, the weekend and some travel days that are completely discretionary for you, and the other days do approximately 4 hours worth of business-related work to call those business days, and, have a business trip to Hawaii.
And again, I got to make sure that we tell everybody, remind them that, we're not accountants here, and the rules do change all the time, so make sure you talk to your accountant before you do anything and try to do anything. But what is the yearly expense on this?
Yeah, so part of that depends on where you set it up, because different states are different. My particular, both my C Corp and my limited partnership, originally I formed those in Nevada, because Nevada is a very good state for both protecting privacy and a really clean veil between the corporate and the private things for suing and all that kind of stuff. But about 2 years after I started it there, they raised some of their fees. And so for me, it was advantageous to move it to Wyoming. Again, you can pick states that have no or low income tax, state income tax to deal with. And you would have to have a registered agent in whatever state that happens to be in. And and then you need to have an address and things like that in that state. But you don't necessarily have to have it where you physically reside. California is a really bad place to have businesses. They just have they have high fees, right? And it costs a lot. For me, to set it up, you'd look at somewhere between $400 and $800 to set these up, and that will include your state fees plus the lawyers are going to charge you something to set it up. So $400 to $800 to set one up. And then in Wyoming, for me, for both of my entities, it's about, I have to double check exactly, but it's about $250 or so for the renewal fees every year for the state. So not really burdensome.
No, that's not bad at all. And the only thing you have to do is a tax return at the end of the year, right?
Yes. And in my case, I do a tax filing for the limited partnership, and then I do a tax return for the C Corp. And then, of course, my own personal. I personally like to use Anderson to do all that because not only did they help me set it up and they understand what I was trying to accomplish, they find deductions a lot of times that I wouldn't. And I've actually got other entities as well. I've done some real estate holdings and real estate flips. I have a publishing company that right now isn't actively publishing, but I'm setting it up so that it can. It's an LLC. And then I've had some other rental property that was in an LLC as well. Because it was fairly complicated, they knew what they were doing for that. That's what they specialize in, is helping small business people who otherwise wouldn't know all of this kind of stuff to do that. The downside is they're more expensive than if you just go to, a lawyer you choose in your hometown to help you set it up. There's nothing wrong with that whatsoever. They're more expensive than that, but they understand the whole process a lot better. They could do your accounting for you. I choose to do that personally because it's not really all that complicated. I just send them in my accounting, but I do have them do my tax work. I'm more comfortable with that. I always did my own personal taxes, before I started the business stuff. But once I got into the business stuff, I was more comfortable making sure all of the blocks were checked by having them do it. And I've been very satisfied with, again, having a professional do those things for me.
Right. And what are they called again? Anderson Business Consultants?
Anderson Business Advisors. Yeah, they're out of Las Vegas.
Okay. And then, so we'll have a link to that in the show notes. So now normally, when you're trading and when you're dealing with your taxes, it gets a lot more complicated than just if you were, a W-9 or something like that. So how do you do that yourself?
I do. When I say I do the accounting, your brokerage is going to send you the forms at the end of the year.
Right.
So I don't keep track of all that. I allow them to send me the forms. Now, if I needed to, I can pull out of my platform. I can pull every single trade that I ever made out of my platform, and it has the cost basis and the gains that I have on it. The good thing about futures, another good thing about futures is it's a portion of it is taxed as long-term capital gains, and another portion is short-term capital gains.
Right, so it's 60-40. I think it's called 1256, right? Rule 1256?
Yeah, exactly.
Tax code, yeah. So 60% of it is long-term gains and 40% is short-term.
Yeah. So I don't do all of that. I allow the tax preparer to do that for me based on the statements and stuff like that. When I say I do my own accounting, I keep track of all of my business expenses that I have. Again, my telephone bill, my internet service provider bill.
So like the bookkeeping.
Expenses, bookkeeping, yeah. All of those kinds of things, I keep track of those, and then I send those into the tax preparer at the end of the year, and he includes all of those things in the tax filing.
Okay. Sweet. Cool. I mean, you have a very nice setup. Seems that you're very happy with it. And so the main reason you did it originally was the asset protection, right? And then you also get the tax breaks, which you normally don't get any otherwise. If you had to do it again, would you do this again?
Yeah, I would. Now, legitimately, I could say, should I keep it this year? Because I could close it down. By the way, that's one advantage also of a C Corp. So say your C Corp runs losses. Those losses actually are based on loans from me to the C Corp. And if, say the C Corp owed me $25,000, it actually does owe me several $1,000s right now because I took some courses with an organization, a trading training organization that cost me $35,000, right? So the C Corp actually owes me that money because I loaned the money to the C Corp to send me to that training. So if I were to dissolve the C Corp today, An S corp, for example, or a sole proprietorship has to be profitable within 5 years. A C corp can hold a loss on its books indefinitely. And then if it does dissolve, then I'll actually even be able to recoup a lot of those losses personally, because some of those are based on loans that I made to the C corp. So the ideal is that you make enough money and then eventually pay yourself back and that kind of thing. But that $35K tuition is not something that I would have ever been able to deduct personally as a amateur trader, right?
Exactly. And how about losses themselves? So normally if you're doing this on your own and you have losses, you can deduct up to $3,000 a year, and then you just have to wait every year to deduct $3,000. Can you deduct all of your losses doing it this way?
Yeah, that's the same. So actually in this case, the partnership is the one that takes the loss. And it's a passive activity. And so in that case, the passive activity loss limitations are still in place. So you only get to be able to deduct those losses. But again, separate things, brokerage fees, cost of, all these other things, phone bill, like internet bill, travel expenses, all of those kinds of things are things that I can deduct that I would not be able to otherwise.
Right. Okay. Yeah, I mean, we have talked about a lot of complicated issues, and I appreciate your candor and your honesty and your openness to share everything. I think a lot of people are going to get a lot out of this particular conversation. And, Brian is not an attorney or an accountant. He's just an individual investor just like us, and he's come forward and he was gracious enough to say, yeah, I know about this stuff. I've done it. I'll share information that I know. And I wanted to get his take on it because he's actually been through it. He's not here as an accountant trying to sell you his services to try to set it up. He's actually, on our side, so to speak. So I hope this helps a lot of people. And, I've learned that, you don't really need that much, because we all need asset protection, like Brian said. Most of us have other assets. We have our homes, our cars, and all that stuff. And those are protected to some degree. But if you have other investments like real estate or really anything, I talked to a friend of mine recently, and I've been thinking about it just for the asset protection part of it. Brian, I was going to go to an attorney, and they charge $1,500 just to set up the basic asset protection plan. Because I know I had a friend who died without a will. Him and his wife, they both died at the same time, didn't have a will. It took over a year to get everything out of probate, even though they had no assets. And whatever they did have was wasted, and the kids didn't get anything. So, you go to somebody like this, and not only will they make you a will, but they'll make it in a point where you have control over what you have. Nobody else can sue you for it. And you have some kind of, like you said, with the, I don't want to get into, I don't know if you're married or not, but there's that component of it as well, So if there's a divorce or if the kids do something, if the kids get in trouble, the kids get into a car accident, it can come back onto the parents and whatnot. So all this stuff is very, very crucial and important. And I appreciate you taking the time to come and talk with us.
My pleasure. I appreciate you having me on. And again, just like you said, I have no stake in this. I'm not getting anything. Even if you went to Anderson Business Advisors, I wouldn't get anything out of it. This is just my own personal experience. And I think you asked a question a minute ago, would I do it again? And my answer is yes. I would do it both for the asset protection purposes, because liquid assets are the hardest to protect of all, right? Cash and brokerage things, stocks, equities, that kind of stuff, very liquid assets. So I would do it for the asset protection purposes, and I would also do it for the business purposes of making it a professional trading business, making those deductible expenses legal and legitimate. And so I've been very happy with the service.
Yeah, you mentioned doing it as a business. Well, we teach everybody that you gotta treat it as a business, not as a hobby, because then you'll actually take it a lot more seriously. And you've actually gone to the next step and actually made it an entire business. But what I thought was really cool was that, you have this structure, but it's not only benefiting your trading, it's benefiting you in other instances as well. And the trading is taking advantage of this protection plan that you already set up. So, when I first approached you about this, I was thinking about, hey, I'm going to set up, Sama Trading Company or whatever, and just run my trading accounts through this. But you can do a lot more instead of just your trading accounts.
Yeah, absolutely. Like I said, actually, my C Corp has a second line of business in publishing. So when I was researching the novel that I was doing over in Scotland for the last 6 months, a large portion of those expenses were all deductible because I've got an author agreement with myself. So the corporation has...
You did a lot of self-dealing there, buddy.
Yeah. And again, I double checked this with the legal guys. Am I doing something? I really don't want to do anything that's immoral either. I want to both be legal and I really want to be doing things that are morally correct. And all of these things are specifically set up in our U.S. code to encourage small businesses. So everything that I'm doing here is not only legal, but it's also considered very legitimate within our legal code.
Yeah, it is. It is. I mean, that's how, the richest of the rich, they can afford the army of accountants to find all the loopholes, and that's why they pay I don't know how that we could get into political, but there are people making a lot of money who pay very little in taxes, and they do it legally. And I feel that if you can, that's your duty to yourself as well, because part of the tax code, I mean, I don't know how many thousands of pages are in the actual tax code, but like a very, very small percentage of it actually tells you how much tax to pay. And then the rest of it is how not to pay that tax.
Yeah.
So it's pretty interesting. But yeah, I know that, paying less on tax and protecting assets, for me, it's a really fascinating, and I love talking about it. But I appreciate you coming on, and we'll have the links to the show notes. Is there anything else that you wanted to share or leave our audience with?
No, I do want to thank you. I appreciate the services that you offer. I was very happy when I signed up both for Blank Check Trader and for Options Guru. Both of those services have been
genius. Option Genius.
Option Genius. I'm sorry. What did I say? Guru?
Yeah, the funny thing about that Option Genius thing is I never looked at myself as a genius when I started it. It was just, we were looking at different domain names, website names that were available, and this is the one that we came up with. So it was either Option Genius or Option General, and I was like, nah, I don't really like the general one, so we went with Option Genius.
Well, it works out. Both of those services have been paying for themselves with the trades that we make and the education that you provide. So I appreciate that.
Great. That's always wonderful to hear. Cool. Great. Thank you so much. All right, folks. Brian is on Facebook if you want to reach out to him. Thank you very much.
All right. Have a great day.
You too. Want to know how to choose the perfect option trade for every trading situation? It's easy. Just download our free trading map and it'll tell you. Just go to optiongenius.com/map.